Hi, everyone. My name is Joe Bladek. Welcome to Canadian Mortgage Weekly, Canada's weekly mortgage video news podcast. We're joined here today by Sam Thompson, and we're going to get right into things today. We're really excited. Got a planned episode today for Cashback Mortgages. Sam, I know I love cash. Don't you love cash?
Absolutely. And you know who else does? Our clients who go for a cashback mortgage. It's a great option. So yeah, I'm excited to chat about, some of the products, what we see a lot of clients using those cashbacks for, and, how you can maximize having that cash by, using this specific mortgage product. I think it's a great addition to mortgage products for the month of June.
Great stuff, Sam. Yeah, really excited about that. And we got a lot planned to talk about today. But one thing that we should know is that with mortgage products and cashback mortgages, having a cashback mortgage is actually really exciting. It's not often you go to the lawyer's office to sign mortgage paperwork and then you're giving them the down payment, you're giving them their fee, and then all of a sudden they're giving you cash back for taking the time to do all that. So one thing we want to go into today, Sam and I, is just to go into how these cashback mortgages work a little bit. And if you have any other questions or would like to know exactly how these cashback mortgages might benefit you, connect with Sam or myself, and we'll make sure we get right in touch with you to answer those questions.
Mhm.
But yeah, the cashback mortgages, Sam, they're usually done on a percentage on the mortgage amount. So tell us a little bit about how that works.
Yeah, exactly. So, I mean, when you're chatting with us and we're setting up the mortgage, any cashback product, typically it's a range from 1 to 7%. It can vary depending on the lender, but it is a percentage of the mortgage that you're signing that you get advanced to you at closing. So again, as Joe was mentioning, it's that awesome feeling where you've given the lawyer all this money, but then you actually get to leave with some money in your pocket as the mortgage gets advanced. You do that final closing, you get some of that money back, and that goes directly to you. It's not, held in limbo or something that you have to really work for. Once it's set up, that'll be released and advanced at the closing date.
Yeah, that's great. So usually that mortgage cashback, with some companies, it's a standard fixed amount. And with some companies, it's actually an amount that can be picked by the client. So as a client, you might need a cashback for any of the various purposes we will chat about in a few minutes, but it can be selected 1%, 2%. So if your mortgage amount is say 500,000 and you take a 1% cashback, you'll get a $5,000 check on closing. Pretty amazing. So that leads us into the second point here is those mortgages where we actually plan a cashback for the client. And that's where, we have a client, they may have a need. For example, they may need to cover some debts that they need to pay off before they actually close the mortgage. So having a planned cashback can actually help take care and consolidate some of those debts at the same time as purchasing that home, which is a really neat feature, isn't it, Sam?
Yeah, absolutely. It's definitely a way to, to get ahead and have a bit of that security. And I know that we also see that in terms of using the cashback to help cover some of those closing costs, because I know for a lot of buyers, saving up that down payment is enough. And, even if you're selling and buying a new property and you have that land transfer tax as well, those things start to add up, including legal fees. So by having a cashback and being able to, throw that at those closing costs, it can help to alleviate some of those cash flow breaks that, you might already feel pretty strapped after, coming up with that down payment amount. So having a cashback can help alleviate some of those closing costs. I know we've specifically seen it really helpful for a lot of first-time buyers, right? Who, they're already getting the rebate for their land transfer tax. So that's typically not an issue. But at the end of the day, they don't have any equity to work with. They're trying to get in the market. So we do see often cashback helping our first-time buyers cover some of those closing costs.
Yeah, exactly. And even for second time or third time buyers, sometimes even if you're in that situation, we have seen a few people that do need that little extra help too. But definitely, you're right. First time buyers, that's a really good help. Uh, Saving the down payment is so hard on its own these days, just to get into the average priced Canadian home.
Mhm.
Yeah. So that leads us to the next point here, is that actually, in addition to a planned cashback, there are promotions that brokers and agents and banks offer at times where the cashback is actually a promotion, and in a sense where it can be built into the mortgage as a bundle promotion, where they can cover things like legal fees to transfer your mortgage or close your mortgage.
Mm.
Same, we've even seen appraisal fees covered, with regards to paying back the client for that appraisal cost when they
Mhm.
have to purchase the home and the bank requests that. So it's really good that the banks are offering these types of promotions. It really makes it for a competitive market out there, because it might be the rate that you are concerned about, but some clients aren't always concerned about the bottom line interest rate. They also want these other promotions, just cash back.
Mhm. Yeah, and it definitely highlights again, it being a good decision to have that conversation with your mortgage professional to get them to review the options that are out there,
Yeah.
because again, we know that coming out of or sorry, still being in mortgage products month, there's a lot of mortgage products and mortgage providers. So by chatting with Joe or myself or Terry Lynn at the office, we can look at, maybe specific lenders are now offering these types of promotions if that's something that you're interested in. So again, staying informed and educated and connected is always a good decision, especially for your mortgage.
Oh, you bet. Um, that brings us to the next point, is that if you need some cash out of your mortgage where it's more than the cash back, then there's another option, and that's you can go straight into a refinance and then take out cash from your equity. It's not viewed as the same cash back arrangement as some of these other cash backs where you get a check on closing for taking out the mortgage. In
Mhm.
this case, it's more so you're taking out the mortgage and you're getting the cash from that mortgage that you're taking out. So a really good way to actually finance renovations or other big projects, big
Mhm.
ticket items, using your home equity, even consolidating debts, and some other things. What are some other things people use their refinances there for, Sam?
Yeah, absolutely. I think, most commonly, like you were saying, we see them for renovations or home upgrades and debt consolidation. But
Yeah.
also, again, if they're looking at, again, making one of those purchases or something that's a bit more big ticket, like you're saying, then, maybe a 1% cash back on the mortgage, it does free up some more options, and give you that straight takeout of your equity.
Yeah, and then also another thing you can do with your mortgage when you do get a cash back and you're not sure what to use that money for, um, or perhaps you've already been planning it all along, and that is to build an emergency fund, something that is really useful, can get you through times when the need for extra cash is prominent, and it can get you through those times when maybe someone has needed to take some time off of work or for a big project that has come up unexpectedly, like a roof repair or something like that.
Mhm.
So always good to have an emergency fund, and having cash to the side for that is important. So yeah, I don't know what you guys would use your emergency fund for, Sam, but definitely not DoorDash.
That's right. Unless it's an emergency.
That's right. Um, yeah, so that kind of rounds off our spotlight on cashback mortgages today. If you are interested in hearing more about cashback mortgages, feel free to connect with Sam, myself, uh, Terry Lynn. Smash that like button, share the video. But now, as we're finishing that up, we want to get into these mortgage statistics that we do follow on Canadian Mortgage Weekly. Um, for our clients. And one of those things is the Canadian bond yield and where that is headed. We've been spotlighting this on Canadian Mortgage Weekly for a number of weeks now. Sam, tell us where this has been headed lately.
Yeah, as I shared the graph, you'll see an interesting change from what we have been presenting over last couple episodes, the last few weeks even. We've seen quite a surge in the bond yield, and currently we're sitting at about 3.18%. Now, the last time we had reported this on last week's Canadian Mortgage Weekly, the bond yield was sitting at about 2.86%. So it is quite an increase, almost 0.5% just in the last week. So it's definitely big news. And I have seen a ton of articles, with commentary and highlighting, some of the reasoning or results that we might see from this bond yield increase.
Yeah, that's great. The next thing we focus on here is our CDOR rate here on Canadian Mortgage Weekly. And for that, we spotlight this because we want to take into account the difference in the variance between variable, prime, and the overnight rate, and just seeing if it's a good competitive option to go into a variable rate versus a 5-year fixed rate. And Sam, if we could just bring up the CDOR rate, we are at 1.83% today. So I'm not sure what the variance is here, but from what I can see, variable is still a good option. I know that a lot of clients are still asking us for variable. The going rhetoric from our clients is that, again, they'll take the variable now versus taking a fix at the higher rate now. So to actually get to that higher rate, they'll have to actually have many variable rate increases to get to that fixed rate. So our variable rate clients are taking variable rates simply because they feel it's high cost to lock in.
Yeah.
And the CDOR rate helps us determine that.
Yeah, absolutely. I think there is that growing sentiment of the variable rate. People are thinking it's increasing. They're seeing it as, an uneasy factor to it. But again, when looking at the bond yield and what the fixed rates are doing and expected to doing, they're almost moving up in sequence as we're seeing the variable and overnight rate has had a couple increases. The fixed rate also, we're likely going to be seeing an increase after the bond yield surge. So again, like you're saying, it's taking that risk to lock in at a fixed rate at where we think the rate is going to be headed. So again, the variance for the CDOR rate does still indicate variable is a good option. Yeah.
That's great. And the next thing we have is the Bank of Canada interest rate announcement. So this is pretty exciting. We just did it, the last announcement there, where the Bank of Canada did increase its overnight rate by 50 basis points. Now the Bank of Canada overnight rate sits at 1.5%. The slide says 1%, so that is an error. It should say 1.5%. And that represents an increase of 600% from the Bank of Canada overnight rate as of January of 2022. So quite a large increase, and we'll make sure we update the stat for next week's slide.
That's right. Yeah, it's definitely been a lot of activity on each of these Bank of Canada announcements. The next one coming up on July 13th. Again, a few articles that I have been seeing, some economists are still expecting further rate hikes as we, head into the next few of the year. So we'll have to, see the coverage and see what the Bank of Canada ends up doing. Again, the next announcement will have the monetary policy, which is always good to be able to comment on and see what the Bank of Canada is forecasting going forward. So yeah, you definitely do not want to miss the next Bank of Canada rate announcements, where we see if they'll do 3 for 3 for 50 basis point hikes.
Yeah, we'll have to see about that. It's hard to say that will actually happen. I think Canadians have been tightening their belts, and that's the whole reason why the Bank of Canada is doing this, is to tighten Canadians' belts. And I think that, you know, if we're seeing that, maybe they'll lay off on the interest rate hikes, and Canadians will stop buying things, because that's what's really in the end of the line causing the inflation that is causing the rates to go up. So if we all stop buying things, for goodness sakes, we'll be able to put this all into check. So let's take a look at the next rate announcement, which is July 13th. Keep in touch with us for Canadian Mortgage Weekly when we are going to join you on our pre-rate show. It'll be a new one, a very different format this time around, and we look forward to seeing you there. And now the next thing, which is really exciting, I think this is the last week we'll be reporting last month's stats, though, is the national house price average, sitting currently at $746,000.
Yes, like you said, hopefully this is the last time we'll be reporting this. Usually we can expect it about mid-month, so hopefully we'll have some updated stats for you guys next week on episode 83. But again, for now, I think we have seen a shift in the market, and we have commented on that before, where it is balancing a bit. We're seeing slightly softer house prices, so it'll be great to see what the final data was for May of 2022, and see if it continues that downtrend that we're seeing in the national home price average.
You bet. Yeah, with the national home price today, we're sitting at a income required of $155,000 for your household family income, and the minimum down payment would be $49,600 plus closing costs. So going back to the cashback mortgages and how important they are these days, getting an extra $5,000 to $10,000 or even $20,000 back on closing can be a huge benefit and can make a big difference. Just imagine if you're buying a house that doesn't even have any blinds or curtains. That alone is going to set you back at least $1,000 just for all that. So make sure you plan out your mortgage correctly. Give Sam, myself, or Terry Lynn a shout. We'll be happy to go over how these mortgage products can affect you, specifically the cashback mortgage products. And Sam, always good having you on the show as well. Let me tell you a little bit about Sam. He is a mortgage agent in Barrie, Ontario. He moved here from Ottawa about 2.5 years ago, and has been with Mega Mortgage for about 2.5 years now. So great having you on the show. And thanks for always providing your expertise here today.
Yeah, thanks for having me. It was a great episode to cover. You gotta love cash back. I don't know anyone who doesn't love cash, especially when you're purchasing a home. But yeah, thank you for having me, Joe. You've been in the industry yourself for over 11 years, living up in Aurelia, with tons of knowledge and expertise in the mortgage industry. So again, thank you so much for having me on the episode, and it was a really good topic to cover.
Great stuff, Sam. Yeah, absolutely a great topic to cover. If anyone has any more questions about cashback mortgages, or for us on Canadian Mortgage Weekly, Canada's weekly video mortgage news podcast, give us a shout. I would love if you could share this video or make a comment below with some videos or topics you would like to see us discuss on the show. And yes, we'll talk about HELOC products, right, Sam? Next week on episode 83. So this will be all about home equity lines of credit. And make sure you bring your questions, and we'll